Hello everyone, welcome back to Just Invest Today. And in today's video, we're talking about Alibaba's earnings because they killed it. And man, all of our waiting is paying off. The story of Alibaba is finally coming to fruition. We've been waiting forever. We're gonna get into Alibaba's earnings. Alibaba has so much future potential. It's not even close to where it's supposed to be. Assets of Alibaba should be around $200 to $250 a share, in my opinion. I already went over that in my last video. So guys, I'm not afraid of any dips or any kind of stuff happening in the market because I know it's going to reach this level, especially since the business is picking up. It's getting into AI more heavily. It's in cloud. They're investing more into the business. The CMR of the business is actually growing back. The revenue is kind of picking up again. Earnings are still growing. So there's a lot happening in Alibaba. This is all off the back of an economy going up, growing GDP at 4 to 5%. Xi Jinping is doing everything, pulling out the bazooka and just making sure that the Chinese market stays afloat, which I like so much. So we're going to talk about what's going on with Alibaba. We're going to break down their earnings. I'm super happy about the earnings because it just shows you that they're going into the right direction, especially when Daniel was killing the business and they got rid of that CEO and now they're making all the right decisions. Like there's not a one decision of Alibaba that I'm not loving, guys. So let's get into this video. Let's talk about it. These are Alibaba results for the quarter. Total revenue up 8%. And I truly believe this is just the beginning as they're using AI to monetize a lot more. So I'm predicting this total revenue to go up to like 10, 12, 13%. And that's really good for Alibaba, especially since there's such a big business already in this e-commerce space in China. So growing 12% is really good. Adjusted EBITDA up 4%. I think this is going to continue going up going forward because they're still trying to become more efficient on what they're doing. Cash position is still 50 billion, guys, net cash. So man, take that off the whole market cap of Alibaba around like $310 billion. We still have a company of Alibaba trading under $300 billion. And you got to think about it. When you compare this to like Amazon, Apple, these are trillion-dollar companies, and you can kind of put Alibaba in that space. So I think Alibaba eventually will go to a $1 trillion market cap. So CMR growth accelerated 9% year over year, driven by growth in online GMV and improved monetization. And again, they're using AI products to monetize more, and people are buying more of the product. So they're talking about how their market share is staying the same and it's not going down because people are talking about competition from PDD, JD.com, and like Tencent. Man, Alibaba is doing a good job of keeping their market share. So if Alibaba can continue to keep their market share and grow around 9 to 10%, that would be amazing as the whole e-commerce online space grows. Cloud double digits to 13% year over year and triple digit growth for their products, man. So we can see cloud just taking off. And I think this is just the beginning. They are putting a lot of money into AI, into cloud. They're talking about how they're going to double down on investments in this area. So we can kind of see this exploding because the whole public cloud market is growing in China double digits, like 15 to 20%. And they are just at the beginning of the whole AI cloud wave, China. So this is a huge potential for growth in the Alibaba business. Income from operation was up 83%. Net income was up 330%. And this is because the equity investments and just things kind of recovering back as the Chinese market is getting better. So that is actually a good sign. Guys, the free cash flow was actually down 31%. And this is going to be happening with Alibaba because of what they're doing with AI and cloud and how they're investing a lot of their free cash flow back into the business. So if we can kind of see a return on this money and the operating efficiency kind of go up and they're using it to actually generate further revenue to get more of that market share in the cloud market and continue to have that 40% market share, these are actually good investments in my opinion because they're seeing a lot of future growth in these sectors. So it's not like they're using the money and it's not growing. When you look at the revenue and the adjusted EBITDA for each section, it kind of tells you the story. So Taobao Tmall revenue grew 5% and the adjusted EBITDA 2%. Alibaba International Digital Commerce, and this is crazy, 32% growth in This is becoming a big sector that no one's really talking about. So if we see this become profitable, this is going to explode Alibaba's earnings even more because they're not being as profitable with this section because they're just trying to get more growth. So adjusted EBITDA 57% down, cloud intelligence 13% revenue growth, 33% adjusted EBITDA. So this is becoming a profitable section of their business because they talked about getting rid of all like their low quality cloud products and getting into more profitable section of the business. And then we can get into logistics, local service, and digital media, but those are not the main focus. Like Alibaba is focused on domestic commerce, AI and cloud, and the international growth. So that's what we should be focusing on when we're thinking about Alibaba as a business. So if you're a true Alibaba shareholder, you know these results are amazing compared to what we were getting before under Daniel. Daniel was doing all the wrong things, but Eddie and Joe are doing the right things when it comes to Alibaba. They still have $20 billion of buybacks to do, and they still have an arsenal. They're doing buybacks depending on the opportunity. I love when CEOs and management talk like that because they know where the stock price should be or where the business should be. They're getting rid of businesses that they don't need and they don't care about, like In Time, like SunArt. That's going to create more efficiency, especially if they're getting rid of all of those employees that they don't need, and they can focus on AI, on cloud, on the international business, on their domestic business. Like, that's what we need from CEOs and management to tell us, because we're looking at Alibaba to be more cash efficient and is producing more revenue and just earnings growth going into the future. During the earnings call, Alibaba's management laid out exactly what they're going to be doing for Alibaba's business and how we can kind of see the future and how we can kind of project out 3 to 5 years for the business. And that's what we got to look for, because if we're truly Alibaba shareholders, we're not looking for it right now and what's doing right now. We're looking to the future, and we know cloud and AI, international growth is the future. So looking ahead, Alibaba's strategic direction and roadmap are clearer than ever. We will continue to focus on 3 business categories. First, domestic and international e-commerce. Second, AI plus, cloud computing. And third, international platform businesses. We are confident that our focus strategy will drive sustained solid growth for Alibaba Group. Our planned investment in cloud and AI infrastructure over the next 2 years is set to exceed what we have spent over the past decade. While we made good progress in growing our core businesses, we maintained financial discipline with enhanced operating efficiency, achieving positive EBITDA growth in Taobao and Tmall Group. Meanwhile, we improved operating efficiency of other businesses with the goal of sustainable business growth and achieving profitability. So as you can see, Alibaba is spearheading a way into this whole AI and cloud field, and they're going to make big money in this field, in my opinion, as they still have a dominant market share, around 40% of the cloud market. And the theme of like the next 5 to 10 years is all about AI and cloud. So this is a perfect investment for Alibaba. They are also talking about how they're going to maintain and get higher operational efficiency. They're going to maintain financial discipline. In the loss-making businesses in the next year or 2 years, the businesses are going to either break even or reach profitability. So that is amazing. And that's what we can expect for Alibaba going into the future. There's a lot of discipline, operating efficiency, getting more into the cloud and AI field, and just growing the overall business. So I'm super excited for Alibaba in the future. And I can kind of predict that in the next 5 to 10 years, Alibaba is going to be a bigger business. And that's all I need to be able to hold this stock for the long term. Guys, what do you think about this video? Like and subscribe.